Hello guys, welcome back to another video breakdown for chart speed, and I will implore you stay back to watch this video till the very end. In this video, I will be going over very quickly a concept in trading that is rarely talked about and how to take advantage of the knowledge of this concept to get in on trade opportunity. And that's the concept of momentum. Momentum, for the sake of what I'm going to be using in this video, I would liken momentum to strength. I'd say momentum is simply strength. And then you have to understand when price tends to rally from a level to another level, when price tends to rally from point A to point B, this is owing to the fact that the demand outweighs the supply. So it's safe to say there are more buyers in the market than there are sellers. And this being the very reason that drives the value of price to appreciate from point A all the way to point C. So you tend to see in this very market at this point in time, there are more buyers than there are sellers in the market. And as the buy orders keeps on stacking, you tend to see the value of price tends to keep rallying all the way to the upside. And then also, when you tend to see a price sell-off from point C right about here to point D, this goes to show that the supply outweighs the demand in the market and that there are more sellers in the market than there are buyers at this point in time. So that influx of sell orders will continually begin to drive price or the value of price to depreciate from point C right about here all the way to it simply tells us that there are more sellers than there are buyers in the market. There are more selling orders than there are buying orders in the market. That's the very reason why price tends to sell off from this level, point C, all the way to the point D right about here. Now, you have to understand also when we tend to see the market rally to the upside, owing to the fact that there are more buyers and there are sellers in the market, this also reflects in the kind of candlesticks we tend to see at that point in time in the market. And usually because we would liken momentum to strength, and then knowing fully well that the more buyers there is in the market than the sellers in the market will naturally drive the price or the value of price from a lower price level to a higher price level. This goes to show that we would tend to likely see more bullish candlesticks, more buy candlesticks, more LD buy candlesticks during a price rally than we would see a sell candlestick. Now, because the candlesticks is simply just price in action, the price movement is represented in the form of the candlesticks. And then once we tend to see price rally into the upside, meaning we have more buyers in the market than the sellers, this is also clearly evident in the kind of candlesticks we tend to see in the market during that point in time. We usually would see more bullish momentum, more bodied buy candlesticks, more bullish buy candlesticks in the market than there are selling candlesticks in the market. Now, this tells us the strength of the buyers in the market, as you can see evidently in the kind of candlesticks that's formed during that point in time, during that price rally. And likewise, when there is a price sell-off in the market, owing to the fact that there are more sellers than there are buyers in the market, we tend to see more selling candlesticks. We tend to see more selling candlesticks, more bodied selling candlesticks than we would the buy candlesticks. And even sometimes when we do see the buy candlesticks form in the midst of these selling candlesticks, a greater number of times, they tend to be less stronger than the selling candlesticks. So this is for a selling market when we have more sellers than there are buyers in the market. And likening this also to a downtrend, we would tend to see more of bodied sell candlesticks than we would the buy candlesticks, because the sellers are simply dominating the market at that time. And likewise, when we have a price rally, or you can liken this also to an uptrend, which is being dominated by the buyers, we tend to see more bodied buy candlesticks than they are sell candlesticks. This goes to tell us that during a price rally, the strength of the buying candlesticks usually be more than that of the sell candlesticks. That goes to mean that what, like I said, I would liken strength. In this case, I'll be likening strength to the momentum. The momentum of the buy candlesticks would tend to be more than that of the sell candlesticks during a price rally. And then during a price sell-off, the momentum of the sell candlesticks would be more than that of the buy candlesticks. Momentum in this case being what? The strength of the candlesticks. The strength of the candlesticks is clearly evident in what? The kind of buy candlesticks we would see during that price rally. Love to see more bodied candlesticks, lesser wicks, smaller wicks, bigger bodies, buy candlesticks during a price rally. And during a price sell-off, we tend to see more bodied sell candlesticks, smaller wicks, bigger bodies than you see the buy candlesticks. And then you have to understand, just like we would say, a gain in momentum would always be indicated by more bodied candlesticks. A loss in momentum many a time would be indicated by rejections, price rejections, candlestick rejections. That tells us a loss of momentum. So when you tend to see more of the bodied candlesticks, lesser wicks or shadows. That tells you there's more momentum in the market. And then a loss of momentum would be indicated by rejections, more rejections, smaller body candlesticks as compared to the previous time. So this would indicate a momentum loss. So this tells us that the buyers were trying to push the price to the upside, and then price succeeded in rallying all the way to this level. And then what? The sellers came back into the market and pushed price all the way back to the downside to the open of this very candlestick. So that is an indication of what? A momentum loss, a loss of momentum. It tells you that the strength at which the buyers were moving the market during this point in time was not as much as during the formation of this very candlestick. This tells us there's a likelihood that the buyers are losing what? Losing power over the market. So this indicates what? The perfect loss of momentum is indicated by more rejections, more rejection candlesticks, and then a strong momentum in the market will be indicated by more bodied candlesticks. Now, how do we take advantage of this knowledge in the market? Now, when I tend to identify the concept of momentum, which you can choose to trade alone as a strategy of its own, or you can choose to use this in confluence with whatever strategy you want. I always love to come and identify higher time trades. So this is a volatility 10 index chart here. And then what would notice, okay, I'll start out from this very point here. So we could see very clearly while price was rallying from this level. So while price was rallying from this level at about here to point B at about here, you would tend to see we had more of what? Buy candlesticks. And not just buy candlesticks. So right about here, from this price level to this very level, there was no sell candlesticks in between. This tells us that what? It was an all buyers market. This tells us that this was a buyers domination market. So the buyers were clearly in control of this market. There were more buyers in the market than there were sellers in this market, continuously driving price all the way to the upside. So what then would you notice is the fact that we have more bodied buy candlesticks. As you can see, the bodied part of the candlestick would be the whole rectangle part of the candlesticks. So that tells us the momentum of the candlesticks, the strength of what the buy movements in the market. So the momentum of the candlestick is seen in what? In the strength of the buy movement in the markets. So you can clearly see from the kind of candlesticks that's being presented us during this price rally. So we tend to see more bodied candlesticks, lesser wicks, more bodied candlesticks, bigger than the wicks we tend to see in the market. What would you notice? We had what? 1, 2, 3, 4 days of very strong bullish price movements, 4 days of momentum candlesticks, stronger bodied candlesticks with smaller wicks. So more of the bodies than we had the wicks. So we had these 4 days. And then what happened next was after 4 days of very bullish momentum candlesticks, we had the next 5th day closing not as bullish as the previous 4 days. Guys, now this is the idea. We had the 5th day closing what? Not as bullish as the previous 5 days. You can see very well, we have the body of this candlestick not even bigger than the wick of the candlestick. You can see the length of the wick of this candlestick clearly covers a greater distance as compared to the body of this very candlestick. So I'm looking at this very daily candlestick right about here. So this would be the length of the wick of this candlestick. You can see how that length of the wick of the candlestick is even bigger than the body of this candlestick, right? So, and not just that, you can see how this candlestick in comparison to the past 4 days is less what? Less bullish as compared to the last 4 days. So this clearly for me, once I see this is an indication that what? There's a loss of momentum. This is an indication for me that there's a loss of momentum. And when this starts to happen, it's also an indication that there's a likelihood of the market's direction. So this is what happens. So assuming I've seen price at this very level. So clearly we had 1, 2, 3, 4 days of very bullish momentum candlesticks. Bullish momentum being what kind of candlesticks that were presented us here, very bodied by candlesticks. There were no sell candlesticks in between these movements, price rallies. And then on the 5th day, what did we then see? We had seen a daily candlestick close that is not as strong as the previous 5 days. Loss of momentum, smaller momentum. And once this does happen, for me, this is an indication that the buyers are most likely losing their strength, the dominance in the markets. What would you notice? As soon as you had this indicating kind of loss of momentum, we had the next daily candlestick close as what? A seller's domination candlestick. This tells us now that the sellers have taken control of the market, as you can see right here. Now, take note, guys. You can see this very sell candlestick, how the body of this candlestick is looking what? Very solid. And this very sell candlestick clearly completely overshadowing the last 2 daily buy candlesticks. It tells us that there's more sellers in the market now than their buyers, that the sellers are pretty much what? Stepped into the market, dominating the market with their sell orders. I would likely then see price continue to what? Rally to the downside. Now then, of course, what would you notice? As soon as we had this very daily candlestick closing what? Very, very bearish, what? More momentum. You see the next daily candlestick what? Was not as bearish as the previous daily candlestick. Guys, but this daily candlestick, very bearish, completely overshadowing the previous 2 daily candlesticks. And then as soon as we had that daily candlestick close, we had the next daily candlestick with what? Yet again, what? A smaller body, the wick, even twice the size of the body. As you can see, the distance of the wick. This covers 2 times the size of the body of this candlestick. This again, an indication of what? A loss of momentum, a momentum loss in the market. So as compared to the previous daily candlestick, this is not as bearish as the previous daily candlestick. This, for me, again, is what automatically sends what? A signal, an indication that because we have this daily candlestick not closing as bearish as the previous daily candlestick, closing with what? More wicks than there is the solid body part of the candlestick. This tells me that there's a likelihood that what? The sellers are losing steam. And there's every chance that what? The buyers would step into the markets. What would you notice? After that candlestick closed, where the next daily candlestick closed as what? A buyer's momentum candlestick. As you can see right here, this completely engulfs the previous daily candlestick, telling us that what? it's a bias momentum candlestick. Buyers have stepped right back into the market. You can see our understanding just the momentum of the market, reading the kind of candlesticks that's formed in the charts can give clues as to where there would likely be a turnaround in the markets, as where the value of price would tend to shift to the opposite direction in the market. Just understanding the concept of momentum. Okay, let's keep going with this. What then would you notice where this daily candlestick kicked right back in, being what's a selling momentum candlestick? And see this clearly engulfed the previous daily candlestick, telling us what? Yeah, the sellers have stepped back into the market, and they will likely continue to see price what rally to the downside. Then what would you notice? Where the next daily candlestick closed what? Even more bearish than this previous candlestick. You can see the length of this sell candlestick. This is what? This a no-brainer? That what? Wow, the sellers are very much dominating the market. And then, guys, what would you notice again? As soon as we had this daily candlestick closed, we had the next daily candlestick not as bullish as the previous daily candlestick. Yeah, not as bearish, rather, sorry about that, as the previous daily candlestick. You can see how this closed with more what? More wicks, more candlestick wicks than there is the body. And this even ended up closing as a bullish candlestick. You can see that. So this automatically is an indication of what? The buyers likely stepping back into the market, which they did, but that was only just short-lived for some other reasons, which I cannot go too much in details right about here, because I'm talking about a different concept in this video breakdown. And then, of course, guys, continuing with what we're saying, you'll notice we had what? The seller. So this was more like just a retracement. We had the selling momentum kicked right back into the market again. See this sell candlestick completely engulfing 1 to 30 days of price action. We're all engulfed, completely engulfed by just this one daily candlestick, telling us that indeed what? The sellers are back into the market. It's a seller's market right here. We should look towards continue taking the price of volatility index to the downside. That's what the momentum of the candlestick right about here, the size of the body of this candlestick tells us. That's it. There's every likelihood that this would continue selling to the downside. But then would you notice why the next daily candlestick close also? It's a nice bearish momentum candlestick. Nice. We have 2 days of what? Very bearish bodied sell candlesticks. And then, guys, we had the 3rd day, not as bearish as the last 2 days. Not just that, we have a loss of momentum. Like I said, a loss of momentum would be indicated by what? Rejection. A rejection. So we had this daily candlestick close at this level. And then we had the next daily candlestick what? Indicating that what? So sellers were trying to push price to the downside. And then the buyers stepped right back into the market. And they succeeded in pushing price all the way back to the upside. So we had what? This daily candlestick closing as a rejection, not just a rejection, not as bearish as the last 2 daily candlesticks, and then ended up even closing as what? As a buy candlestick, even though we did not have more of the buy momentum kicking. But then this gives us an indication that what? The sellers are losing steam in the market. There's a loss of momentum as compared to the last 2 days. There's a loss of momentum. And when you tend to start seeing the loss of momentum in the market, there's every likelihood that the direction will tend to change. So we're saying that what? 5 out of 10 times, 6 out of 10 times, when you see a loss of momentum in the market, is because there's every likelihood that the opposite party wants to what? Step into the market. So we had the last 2 days closing very bearish, and then the next day closing with a loss of momentum, indicating that what? The buyers are likely going to step into the market. Even though that did not happen immediately, it eventually did happen. So you can see how this to an extent can be relied upon. This to an extent, like I said, can be relied upon. The concept of what? Momentum. You see, we did not have the bias momentum kicked right back in immediately because the next daily candlestick also closed as a bearish candlestick. But then we have seen what? Yet again, what? The rejection from the downside. Yet again, we have seen that what? We have more of the wicks than we have the body. And then the next daily candlestick, you can see how we had what? A nice bullish engulf, completely overshadowing what? 1, 2, 3, the last 3 days of what? Of price action. Now you can see that what? This bullish momentum kicking into the market was already what? The indication of the bias kicking into the market was already sent to us by the fact that we saw this loss of momentum 2 days earlier as compared to the last what? 1, 2 days. See? So by the time this buying momentum kicked into the market, I wouldn't be too surprised because what? The market had already given us a clue some 2 days earlier when we had this loss of momentum. This candlestick not as what? Bearish as the last 2 days. Now, we can keep doing this on and on and on and on. And then, like I said, this can give us clues to likely places where the market's direction is going to. So you want to see what? That the momentum was moving to a particular direction, and then there's a loss of the momentum. There's a candlestick size that's not as strong as the previous days. Preferably, you want to see more of what? The rejections. The rejections confirms the loss of momentum even better. Now, that's going on and on and on. And as you can see, okay, guys, even this makes it even more clearer. So we had this bullish momentum telling us that the buyers are going to step into the market, guys, right? And then what happened next? The next daily candlestick closed as what? As a sell candlestick with more momentum to the downside than there is to the upside, lesser wicks. One would think, wow, oh, I think the buyers are kicking back into the market. But then what would you notice? As soon as this daily candlestick close, we had the next daily candlestick close, say what? Loss of sellers momentum. Guys, if you can get this concept, you can understand this, then it's going to be a deal breaker, guys. Now you can see, as compared to this very day that closed with what? The bearish momentum candlestick, we had this day closing not as bearish as the previous day. We had this day closing with fewer body than we have what? The wicks. So we have more wicks than there is the body. This in an indication that what? There's a loss of what? Selling momentum, guys. There's a loss of selling momentum. And because this is happening at a level that price had previously what? Had a loss of selling momentum before, you can get what? That automatically becomes what? And even more what? More confirmation that what? There's a likelihood of this market turning around to the upside. So what? This daily candlestick closing as a bearish candlestick. And then the next daily candlestick what? Showing us an indication of a loss of momentum. Not as bearish as the previous day. Little or no body on this, right? And then what would you notice? As soon as we had this daily candlestick closing what? Not as bearish as the previous day, closing as a loss of momentum, the next daily candlestick was what? An engulfing candlestick. I wouldn't be too surprised that the next daily candlestick ended up closing as what? A bullish momentum candlestick. Because what? The previous daily candlestick had already given us what? Heads up on that. The previous daily candlestick had given us heads up on what? The likelihood of the buyer stepping into the market to dominate the market. And you can see, as soon as we had that bullish engulfing candlestick right back into the market, all we will see was what? A price rally into the upside. Now, you can keep going on and on, and you can keep doing this everywhere in the charts, and then you can see how this works. But then it's one thing to understand the concept of momentum. It's another to understand how to use this. So like I said, you can use this as a standalone strategy, but then I will be showing you how to use this in what? Confluence with my top-down analysis, top-down approach strategy. Okay, so let's go, guys. You can see we had what? This daily candlestick closing very bullish, completely overshadowing the last 2 days, telling us that what? The buyers are more than the sellers in the market. It's a buyer's market, where the next daily candlestick closing even more bullish. You can see the body of this candlestick, very, very big, bigger than the wicks of the candlesticks. This daily candlestick with the body even bigger than the previous day. And then the next what? Day, forming what? As what? A loss of momentum again, guys. Now, I really hope you get to see this from what it really, for what it really is. So we have a third daily candlestick closing what? Not as bullish as the last 2 days. So if you're comparing this with the last 2 days candlestick, this is nothing compared to the last 2 days candlestick. So we have 2 days of bullish momentum. And then we had the third day with the rejection from the upside, indicating what? A loss of buyer's momentum. We had the body of the candlestick closing even smaller than we have the wicks of this candlestick. And then we have this candlestick not as bullish as the previous. Now, when once I tend to see this, that was previous 2 days of what? Very strong bodied buy candlesticks. This automatically sends what? A signal. What? There's every likelihood that what? The buyers are tired of moving price to the upside, that the buyers are done with the market. There's every likelihood of the seller stepping into the market. And then what? You'd notice on the next daily candlestick closed as what? As a sell candlestick. Selling momentum kicking in. This overshadows the previous candlestick. And now seeing this daily candlestick closed as a sell candlestick, it doesn't even take me unawares. I'm not surprised because what? Because the previous daily candlestick gave us heads up as to what? The likelihood of the market's direction shifting from what? From buying to what? To selling. Going to the fact that what? This candlestick closed as what? A loss of buyer's momentum, not as bullish as the last 2 days candlestick. Guys, come with me. This is getting even more interesting. So right here, what would you notice? We had this, once you have this candlestick is so very strong. At what? 1, 2 days. We had 3 days of what? Very bullish candlesticks. And then what? We had this third day. What would you notice? Not even what? A buy candlestick. It's closed as a sell candlestick. Not as bullish as what? The last 3 days. Guys, what does this mean? This again tells us what? Of a loss of what? Buyer's momentum. There's every likelihood that the market will turn and start selling. Because we had what? In comparison with the last 3 days, this candlestick is nothing strength-wise as compared to the last 3 days. And then what? Seeing this next daily candlestick close this bearish, I'm not surprised because what? It's pretty much gave us heads up during this previous day as to the likelihood of the buyer stepping into the market. Now, guys, like I said, we can keep going on and on and on and on. We can keep doing this. And you would notice that this is very powerful. I bet no one has told you this before. So as you notice that we had this daily candlestick, very bullish. As even before that, you see this daily candlestick closed very bearish. And then the next daily candlestick closed what? As a loss of seller's momentum. In comparison with the previous daily candlestick, this sell candlestick is nothing compared to this. We have more of what? More of the wicks than there is the body. Clearly telling us what? Clearly giving us an indication that what? There's every likelihood that the buyers are going to step into this market. And there's every likelihood that the sellers are done with what? Moving price to the downside. Now you can see how just reading the candlesticks alone can give you clues as to what? The next market direction, the next market movement. Guys, you can see this daily candlestick, very bearish. The next daily candlestick, not as bearish as the previous daily candlestick, more wicks than there is the body, telling us that what? The sellers have lost momentum. And then you can see the next daily candlestick that will form right after this was what? the buyers engulfing candlestick, buyers momentum candlestick, buyers kicked right into the market. I'm definitely not surprised that this daily candlestick is closing this way because what? Previous daily candlestick gave us heads up on that. Yes, you can keep going on and on. You can see what these 2 days of very what bullish candlesticks. See the momentum bodies of these candlesticks very solid, fewer weeks, and then we had this daily candlestick, right? Not even closing bullish, this closing as a sell candlestick, not as strong as the last 2 days. Yes. And then what? This automatically sends what? A signal that what? The buyers are likely what? Tired of moving price to the upside. You can see how just comparing the kinds of candlesticks that forms in the market can give you clues as to what will happen next. Now, I'm obviously not adding any other thing to this. Not even support, not resistance, just reading what the charts or what it truly is. So you can see, as soon as we had the last 2 days close very bullish, and then this daily candlestick not as bullish as the last 2 days, this daily candlestick closing as a sell candlestick, kind of giving us an indication of what there's every likelihood that the sellers stepping into the market. You can see we had the next daily candlestick confirming that there's a complete loss of what buyer's momentum. As you can see, it's loss that our buyers try to push price all the way towards this high. They succeeded in pushing price all the way to the highs right about here, and then the sellers stepped into the market, and then they pushed price all the way to the downside, and then price closed at this level. And you can see after this loss of buyer's momentum candlestick, the next daily candlestick was what? As a complete bearish momentum candlestick. I'm certainly not surprised. Because what? Price had pretty much given us heads up some 2 days ago, right from this very sell candlestick. And what? There's every likelihood that the sellers are going to step into the market. And see how this alone as your strategy. Even more. Why use this knowledge of market momentum? I obviously love to see that there is a shift of momentum or there's a loss of momentum in the higher time frames. And once I see that, I then capitalize off that knowledge, scale down to the lower time frames to look for confirmations in line with the higher time frame momentum bias. Okay, what do I mean by that? Come with me, guys. So on volatility 10 index, 10-1 index rather, sorry, noticed at the close of yesterday's candlestick. So this is yesterday's candlestick. This is the current daily candlestick forming. That's a couple of hours to close. I think we have some 10 hours to the close of this current daily candlestick. But I noticed from the close of yesterday's candlestick that what the very selling move that's happening today is likely going to. Guys, I have to be very honest with you. I'm not surprised. Not surprised. You know why? Okay, this is the very reason why. You can see 3 days ago, you can see how very bullish 3 days ago candlestick closed as what? A bullish momentum candlestick. And then we had the next daily candlestick being yesterday's candlestick, not as what? Bullish as the previous daily candlestick. You can see that the wicks of this candlestick is even bigger than what? The body of the candlestick. Automatically, what does it tell you? There's a loss of momentum, loss of bias momentum. This tells me that what there is a loss of bias momentum. This gives me what an indication that what there's every likelihood that sellers will step into the market. Nice. That's the first thing I notice. Just off reading the momentum, the candlesticks. This automatically tells me at the close of yesterday's candlestick that there's every likelihood that today sellers will kick into the market. Today's candlestick would likely form more selling pressure. Today would likely see the daily candlestick close as what? A sell candlestick. That's all I had what? Deduced from yesterday's close of the daily candlestick in comparison with 2 days ago. Now, so clearly, because I've understood that there is a shift of momentum, because I understood that there is a loss of bias momentum, comparing the kind of candlesticks that formed yesterday and then 2 days ago, telling me what I'm looking for selling opportunity. Guys, just what? Just understanding the concept of momentum and then identifying the loss of momentum tells me for a fact that I'm looking for what? Selling opportunity today. So what then do I do? Just as a way to influence guys, I always love to see that there's what? Lots of confidence before I get in trade opportunities. If you've been following my previous videos, you would know I'm more of a confidence trader. Now, what then would you notice? Right here from the daily time frame on volatility 10-1 index, there is a shift in the market structure, guys. There is a shift in the market structure. So you can see clearly we were in a bullish market structure where we can clearly see the market pointing us higher highs and higher lows. So we had this. And then, of course, we had this. We had this. So clearly, we had the market's trend in a bullish environment, in a bullish, in an uptrend, high. So we have this being what? We have this being in the higher low that led to the higher highs right about here. So for as long as price stays below this higher low, volatility 10-1 index would be considered to very much still be in a what? In an uptrend. But then that is not the case. You can see how we had what? This nice sell-off that has broken below this most recent swing low, most recent higher low. Within us right here was a lower low, guys. So you can see how we have the market structure to the downside. Yes. So I'm clearly looking for selling opportunity. Just in a bit to confirm my sell bias is the fact that what? Looking at the market structure, we've had ourselves what? A nice daily structure shift from what? From uptrends to downtrend. And because I'm a pro trend trader, I'm always looking to trade in line with what? The market's trend, the market structure. This also confirms my sell bias on volatility 10-1 index. That is the case. So we obviously had price when led us what? These swing highs that led us to what? The swing lows right about here. And then, of course, because we have had a nice sell-off, giving us a new swing low, with this nice movement to the upside, more like what? A retracement. Because we've had that nice impulse leg, shifting the market structure from bullish to bearish. We had this buy movement being what? From the a retracement, a pullback. Now, once there is a retracement in the market, this is where usually I would like to identify areas of interest, levels where I'm looking to get in on what? Selling opportunities in line with what? The market's trend. So bringing in the Fibonacci retracement, see guys, from the swing highs right about here to the most recent swing low, lower low, you can see how what the retracement is coming right into the Fibonacci holding 61.8 reversal level. And now you can see what? How this is making even more sense. we have this loss of bias momentum forming right at where the Fibonacci reversal level. Guys, this is a no-brainer. It's a no-brainer, guys. So we have what? The loss of momentum forming right at the Fibonacci reversal level, confirming my sell bias also. So we have what? A loss of bias momentum being my sell confirmation number one. We have a structure shift, a daily time frame structure shift from bullish to bearish, being my sell confirmation number two. We have also a retest of the Fibonacci 61.8 golden reversal level from the daily time frame, confirmation number three. Now you can see, I'm not just trading off the knowledge of momentum. You can see how I'm using this knowledge in confluence with every other knowledge to make this was a higher probability trade set. Now this automatically then takes me to the lower time frame because it seems like what price is likely forming a potential lower. So it looks like price is currently forming a potential lower high, and this looks like what? Obviously the pullback is likely coming to an end. You can see how the loss of bias momentum formed right at the Fibonacci golden 60 reversal level, confirming the likelihood of what? The sellers kicking right back into the market to then give me the next impulse to the downside. And this is usually where I then start considering my likely take profit levels. First level for my take profit would be this level right about here, pointing to the fact that this was the previous swing low. So I would love to see price come and make a 100% retest of the previous swing lows. Then I'd consider more levels like the Fibonacci extension level. This will be my next level take profit target. So on volatility 10-1 index, guys, it's a no-brainer. I'm very much looking to short volatility 10-1 index for every of these reasons I have explained already. So then moving down to the lower time frame, all in a bit to what? Stack up the confluences. This takes me down to the 1 hourly time frame. See on the 1 hourly time frame. So clearly from the daily time frame, my directional bias is to the downside. Every indication is pointing to the downside. From the daily time frame, what then would you notice? Sorry guys, from the 1 hourly time frame, what then would you notice? Is the first being the fact that there is a shift in the market structure from bullish to bearish. So we have this. So the hourly time frame also has shifted the market structure from bullish to bearish. Sorry about that. So this was the higher low, hourly time frame higher low. This was the hourly time frame higher low that led to higher highs right about here. So from the hourly time frame perspective, for as long as we stay above this higher low, we would consider the market structure to be in an uptrend, but then that's not the case. You can see how we're currently trading below that level. So we have a nice structure sheet. We have a nice hourly time frame structure sheet. Bullish to bearish. Yes, it's a no-brainer. So we have a daily time frame in a bearish market structure. We have a daily time frame clearly showing us a loss of bias momentum. We have the daily time frame retesting the Fibonacci 61.8 golden reversal level where we had the loss of bias momentum. Then coming down to the hourly time frame, you can see we have what the hourly time frame structure has shifted from bullish to bearish. Guys, confluences are pretty much stacking up. It's a no-brainer, guys. I'm certainly looking to get in on sales, take 10-1 index all the way to the downside, guys. Then also, just as a bit to stack up my confluences. Notice also, we had a perfect case of what? A bearish divergence. We had a perfect case of a bearish divergence. So you can see, we had price giving us lower highs right about here. But then we have what? Higher highs right about here. So we have what? Confluence number 6 in what? Hourly time frame bearish divergence. And that starts. Then the next being the fact that we have ourselves what? A perfect hourly time frame double tops. As you can see right here, this is more like a double top. And the first leg, and then the next leg of that. And then clearly, we've had the nice break of the neckline of the hourly time frame double tops. Somewhere right about here. You can see how this, by the time we extend that, that's for us is a structural level. Looking to the left, when we're beneath that level, we have the level held up as resistance. You can see how this could be the neckline of the hourly time frame double tops. Confluence number 7. Also, you could tend to see this as the hourly time frame head and shoulder pattern, which is a sharp reversal pattern, confirming the selling pressure just kicking in, guys. You can see confluence number 8. There are too many confluences as to why what selling volatility 10-1 index at the moment is a no-brainer, guys. And now this has currently moved some distance. This is how you can take advantage of the current move in the market. So you choose to wait for a break of this level. And then at the break and retest of this level, because guys, we know for sure it's a no-brainer. What volatility 10-1 index, sorry about that. We know for sure it's a no-brainer that this is very much heading to the downside. It's a no-brainer from the higher time frames. Every indication is pointing to the downside. So you can choose to wait for a break and then a retest of this structured level, hourly time frame structured level. So currently the level is holding up as support, just like it did right about here. So you can choose to wait. Broken level of support becomes what a new resistance, and then at the retest of this level, you then get in on your sell. Alternatively, I see price coming back to retest the neckline of the head and shoulder pattern right here, where I will be looking to get in on more sales. So I see price alternatively coming back to the neckline of the head and shoulder pattern. Yes. So the retest of this level being the neckline of the head and shoulder pattern, I would be adding more sales right at the retests. My first level take profit target right here for a nice 1 to 3. Alternatively, I would wait for the break and the retest of this current hourly time frame support, hourly time frame structured level, and then I'll look to getting on selling this all the way to the downside. Guys, let me know what you think about the concept of momentum and how this has definitely changed the perspective as to how you see the market. I'd love to see in the comment section what you think about this video. And then if you obviously think I've not gone into depth to explaining this concept, and come on here and do even more videos breaking down the concept of momentum, then how to take advantage of the knowledge of this concept. Leave me your thoughts in the comment section. I'll very much be looking out for every one of those comments of yours. Also, do well to like and share this video. If you are not yet subscribed to the channel, guys, go and hit the subscribe button right away and turn on post notifications so you don't miss out on such updates. Thanks for staying to the very end of this video. See you next video, guys.